Hey and welcome back to my channel. In this video I'm going to be talking about Bitcoin. In particular I'm going to be talking about the big event that is coming up this year, April 2024, the next Bitcoin halving. What is a Bitcoin halving? How can it affect you? Everything that you need to know about that I'm going to be going over in this video. If you're new to my channel, welcome. My name is Emily and on Mindfully Trading, I share an insight into my journey as a Forex trader, as well as some educational and trading tips. I've been day trading for over 6 years now. I originally started day trading the US stock market, and since then I have transitioned to day trading Forex, where I trade both my live account with Vantage Markets and I also trade with a prop firm, the 5%ers, who I will talk a little bit more about later in this video. But this video will be focusing on the cryptocurrency markets, in particular Bitcoin, which I have traded a few times in the past, but I mainly stick to invest in Bitcoin. And I'll be talking more about why later in this video. But before we dive into the main content and jump onto the screens, make sure that you like and subscribe to the channel. All of the software that I'm going to be using will be linked in the description below, and let's get straight to it. Firstly, let's have a look at what exactly a Bitcoin halving is. Well, for only the 4th time in its 15-year history, Bitcoin is about to undergo its 4th halving in April of 2024. The Bitcoin halving is an event where the reward for mining Bitcoin transactions is cut in half. This basically reduces the rate at which new coins are created, and thus it lowers the available amount of supply. So it's looking at supply and demand. In contrast with our usual currency, which is losing its value over time, and when you have £100 in 10 years time, it will be worth a lot less than that £100 that you have today. Bitcoin works a little bit differently, and that is where the halving comes in. It is to ensure that its value remains. In fact, it can even make it go up because it is limiting the supply available on the markets. At least that is the theory, but we will have a look at the charts and look at some historical data of what happened with the previous halvings in just a moment. So the halving cuts the production of Bitcoin in half in such a way that mining the cryptocurrency only generates 50% of the yield that it used to. So at the moment, the mining rewards are currently at 6.25 Bitcoins per block, whereas after the halving in April 2024, the same amount of Bitcoins will be reduced to 3.125 Bitcoins. This event is not governed by any kind of government body or centralized bank. Instead, it's hard-coded into Bitcoin's blockchain technology, originally created in 2008. It was created as an antidote to the perceived flaws in our current financial system, which essentially contributed to the global crisis of 2007 to 2008. By cutting the supply, the halving is designed to ensure the scarcity of Bitcoin while preventing extreme price inflation. So how can this actually affect the current price of Bitcoin? Well, let's have a look on the charts. To check out what happened before when Bitcoin was halved the previous 3 times, I'm going to hop onto the monthly time frame. A time frame I don't usually use because I am essentially a day trader, but I do also invest. I primarily stick with investing into stocks, and I prefer to use the largest time frame to have a really good picture of the macroeconomic environment. So zooming right out here on the charts, we've made the candlesticks very small because we can see the entire lifespan of Bitcoin since it was launched here on TradingView back in October of 2009. Now, the first halving actually took place in November 2012, where Bitcoin reward was reduced from 50 Bitcoins to 25. So let's just zoom in on this little piece of the chart. This was the first time it happened. So we can see, looking at this price chart, after the first halving that happened in November 2012, we had a month or two where price just gently carried on creeping up. But it was actually 2 months after the initial halving, January 2013, where we had a large candle coming to the upside, volume was coming in. And once it broke the high here, which was the end of February 2013, we started to see a massive push up. So if we focus on the month after the halving in December of 2012, in just 3 months, we saw a 687% increase. In fact, it went up to a high here of just over 2,000% from its initial low just after the first halving, before it took some time having a pullback here. And if we just gauge this over the duration of the year, so let's go from the December, the date, the month after the first halving, December 2012 to December 2013. This is where we had such a massive jump up in the space of a year. It rose just over 8,000%, which is insane. Obviously, if you caught that very early movement, the momentum of Bitcoin, that's why we have those notable millionaires nowadays. Myself personally, never even heard of Bitcoin at this point in time, unfortunately. So let's move forward in time to the next halving, the second halving, which was in July 2016. Now it's quite interesting, we've got a similar pattern on the run-up of the second halving. We've had this pull back down, we're kind of creeping back up. July 2016, Bitcoin's halved. There's no initial momentum in the same month. In fact, the next couple of months, it's still having this little pullback. But after that, we start to curl up and then we get another run of the next bull trend upwards. And then zooming back down here so we can see the scale of this from that July for the next year that follows, July 16 to July 17. And in this case, it moved nearly 3,000% to the upside. Once again, I'm going to just drop my little arrow here and on May 2020, which was the third halving that occurred for Bitcoin. And we're generally seeing a little pattern here whereby in the event of the halving, we're getting a push up, but not really a massive push up straight away. But it does seem to indicate the start of those huge bullish pushes up. And once again, in the space of the year that followed, we had a price increase of about 730%. So the scale of the percentages are getting smaller because naturally the price is going up, but we're still getting a massive push to the upside. From May 2020 to May 2021, we saw this huge bullish run up. Now, this is obviously in confluence with events that were happening globally with the COVID, the pandemic. There was a lot going on that also may have influenced this push up. But it is interesting to note the pattern that price takes after these initial halvings, where we have a kind of gentle increase and then a push up, a huge bullish run to the upside. But you might be wondering, how does the halving affect other crypto assets? Does it affect all the other cryptocurrencies like Litecoin, like Ethereum? Well, the halving sets a pattern across the other crypto assets that can influence price supply dynamics. Thereby, it does affect the other crypto assets, but not completely. When it comes to cryptocurrencies, Bitcoin is the king. It is the head of the crypto world. And so the limelight is on Bitcoin. The focus is on Bitcoin. However, the general movement of Bitcoin, especially seeing huge momentum pushes like this, does have a kind of knock-on effect with the other crypto assets. So it's likely to influence them as well. So if Bitcoin has a huge surge upwards, it's likely that other crypto assets will experience the same kind of volatility to the upside, but just not on the same scale as Bitcoin. For example, let's just have a look at Ethereum. So just to compare here, I've just loaded up the chart on the right hand side for Ethereum, and then obviously we can see Bitcoin here on the left hand side. Now, although it doesn't exactly follow it precisely, you can see a very similar pattern formation here for Ethereum against Bitcoin. We've got the same kind of pushes up, the same pullback, and the same push up here. And at the moment, we've had this big, deep pullback, and we seem to be turning. So you can see that the crypto asset, in this case Ethereum, sort of follows in sympathy with Bitcoin, although it is not tied precisely to the main asset. I think it's quite interesting to look at what other investors and other analysts are predicting. So right here, we can see that one of the most renowned price forecasters is crypto analyst Michael Van de Poppe, who predicted with almost laser-like accuracy that Bitcoin would hit between $65,000 to $85,000 at the end of 21, which it pretty much did. And since has said that he expects highs of around 40 to 50k at the 2024 halving before the price eventually pushes beyond 100k. Well, at the moment, price is currently at $62,000, so it has already hit that after its deeper pullback where it dropped back down to $16,000. Price pretty much spent most of 2023 just gradually pushing up, but so far for 2024, we've already had a 43% increase in February alone. investment. Another famed investor, Cathie Wood, predicts that Bitcoin will hit $1 million by 2030. Her firm is known for making big, bold predictions that is rooted in solid mathematical foundations. And the Bitcoin halving is fundamental to her vision, as it is creating steadily increasing scarcity that supports higher prices. As she says here, Bitcoin is a store of value and an investment, limited to 21 million units. So right now the inflation rate is 1.8% per year. That's what is being mined. In a couple of years, that will halve to less than 1% and keep halving until you get to that 21 million. So after this initial halving in April 2024, there will be another halving that will take place in 2028, which may once again create another surge to the upside. Who knows, may make Bitcoin hit that 1 million as Cathie Wood predicts. One of the keys to remember here is to be smart when investing in Bitcoin. I'm not creating this video so that you can go away and put all of your hard-earned cash into Bitcoin. For the record, it says in the description below, and I'll remind you guys, I'm not a financial advisor. I'm just sharing my own views on the situation. So make your own risk assessments, your own investment choices as per your own strategy, what you can and cannot afford to lose. However, if you're in a position where you are thinking about investing in Bitcoin, it could certainly provide some interesting reward, as we can see looking at the historical charts, looking at the upcoming economic news, and obviously what other major investors and analysts are predicting. Personally, I like to keep a varied portfolio. I like to diversify, and I do have some Bitcoin, but I haven't put all of my eggs into one basket, so to speak. But I like to balance my investing together with day trading, which is another ball game completely, because that is very fast, capitalizing on quick market movements, and I prefer to focus on trading pound against the dollar. In fact, I currently day trade with the prop firm, the 5%ers. If you're not sure what a prop firm is, I have got a separate video that does explain more, but it's a way that you can trade the markets even if you don't have the upfront capital. One of the things that can prevent people from capitalizing day trading is lack of funds, and that's where a prop firm comes in. So the 5%ers, the prop firm that I trade with, have 3 different programs available to choose from. So you have to actually trade with them in a demo, a simulated environment, to prove to them that you're worthy, to demonstrate that you have the skills necessary to trade their account. Once you pass that program, that challenge, then you can access a fully funded account. So I'm currently enrolled on their hyper growth program, and there are 3 different options available for account size. So it starts from 10,000 and it goes up to 40,000, but you're not limited to that. Once you pass and are trading that live account, you basically can scale that account up. So every time you hit a profit target of 10%, you can effectively increase that account to be able to increase your profits. If you want some more information on them, I have got a link in the description below. But an important note to remember about cryptocurrency is that it is not currently regulated here in the UK, where I am based. In fact, the Financial Conduct Authority has repeatedly advised people and warned investors that they could lose all of their money if they buy cryptocurrency with no guarantee of compensation. So it's really important to take this into consideration when you are creating your own plan for investing. But I hope this video gives you something to think about. I hope that you've enjoyed it. If you have, or if you've got any questions or comments, do leave them below. It's always great to hear from you. If you've enjoyed it, please let me know by smashing the like button, and I will catch you in my next video. Thanks for watching. Bye.